Welcome to the Realty Rundown, the podcast that cuts through the noise of the real estate world. Your hosts, seasoned industry experts Nick and Nate, are here to guide you through the entire process. Each week, they're breaking down the latest market trends, decoding complex jargon, and sharing insider secrets you won't find anywhere else. Whether you're buying your first home, selling a property, or building an investment portfolio, we provide the clear, actionable advice you need to make your next move your best move.
All right, everybody, welcome back to the Realty Rundown from the Nic Wyse team. I'm Nic Wyse.
I'm Nathan Schwartz.
Julio Bardales here.
That's right. We've got Senor Bardales in the house, man.
That's right.
I think this is our first official all three of us episode.
That's right.
I think so, yeah. Finally, we made it.
Yes, we made it, man.
It happened, yeah.
First but not the last.
That's
all
right.
Well, everybody, thank you for tuning in. Today, we're kind of going back to the basics on some stuff because everybody knows that you need a mortgage to buy a house. But have you ever stopped to really ask yourself, what is a mortgage? Where did they come from? Why are they called mortgages? And then we're going to touch base on current mortgage situation and why rates have started to move back up again. So let's go ahead and dive in.
All right, Nick, I have a question real quick. Like you saying the mortgage rates have been going down and then going back again. What's really going on with that?
Yeah, that's the question of the hour right now is, why are rates starting to go back up again? In fact, well, it's kind of what you think of. For a while there, we had inflation that was cooling. That's always going to push mortgage rates down. And then this past week, the conflict in Iran has escalated again.
Yep.
And whenever there's uncertainty in the world, the markets react. Oil prices move higher. Higher oil prices lead to higher inflation, and higher inflation always means higher interest rates. So, yeah, mortgage rates then follow the interest rates, right? So it's just a trend that we're seeing right now. And as of the moment today, the numbers that I'm looking at, the average 30-year fixed mortgage is back to 6.68%. Close. That's actually close to the highest level in nearly 10 months. So even these little small moves, it was 6.4, 6.45. But even these little moves, when you add them in, and you do the math on it, they can have huge impacts on a buyer's affordability and their ability to buy their next home.
Yep.
Okay. These might be something pretty funny and silly, but what is actually, mortgage?
Yeah, you should know this, Julio. No, I'm kidding. I made Julio ask that question.
I want to know everything.
That's right, man. But it's not a silly question, really. And since Nate is our buyer agent expert, I'm going to let him answer this one.
Yeah, so most people think the mortgage is the loan. But technically, the loan is the loan, and the mortgage is the legal agreement that gives the lender the right to take the property if you don't repay it. So think of it as collateral.
Nice. Okay. So, the house, but the bank has a legal interest until it's paid off, right?
Yeah, exactly. The bank has that legal interest. That's exactly what it is. They've got their own rights to the house, right?
Okay, but what is it actually really called? Why is it called mortgage? I never thought about, where that word came from.
Yeah, until I started writing this episode, I didn't think of it either. And I kind of came upon it by happenstance. I was reading some articles about, mortgages and the history of mortgages. The word mortgage itself actually comes from Old French. Mort means dead. Think like mortuary or morgue, but mort, M-O-R-T, means dead. And then gage means pledge. So the word literally means dead pledge, which sounds very cheerful. Everybody loves a mortgage anyway, and now we know it means dead pledge. But the reason is actually pretty simple because the pledge itself can die in one of two ways. Either you pay off the loan, the pledge is dead, or the lender takes the property back through foreclosure. So one way or another, the pledge ends, and that's where the name comes from.
Okay. What did mortgage always existed in the past?
Yeah, it's crazy. You wouldn't really think about that either, right? I don't even you read the Bible sometimes and they're talking about their house, and that was, thousands of years ago, literally. So yeah, houses have been around forever, and so have mortgages. Really, literally going back to ancient Roman times, people have been borrowing against land for thousands of years. And the Romans had a similar system to what we use today. But it was really England that developed what became today's mortgage. And then America completely changed the game.
It did indeed. So before the 1930s, buying a house was much harder. Many loans lasted only for 3 to 5 years. And then at the end, you owe the entire balance all at once. So imagine today buying a $300,000 house. making payments for 5 years, and then someone says, great, well, now you pay us the remaining $275,000. So most people couldn't. Then came the Great Depression. Banks filled, people lost homes. The government created programs like FHA, later Fannie Mae, and then eventually Freddie Mac. But these changes helped create the 30-year fixed mortgage that most Americans know today. So it made homeownership possible for millions of families, literally.
Yeah, yep, that was Go USA. We may not have won the World Cup, but we won the mortgages.
Yeah, right.
No, it is crazy when you think about, like, it can be tough to pay a mortgage, right? Those payments can be difficult, but try to imagine then if the loan came due every 5 years, you're either like moving, right, and getting a new mortgage or doing some kind of refinancing. So that 30-year mortgage is one of the greatest financial inventions in American history. And like Nate said, it really opened the door to home ownership for a much bigger generation, for families in a whole new generation. And fun fact, this is something that really gets talked about, but it has been floated, the possibility, and I think when they were doing the big, beautiful bill, that one thing that they were tempted to incorporate was 40 or even 50-year loans. That was floated through the halls of Congress. And you know what else floats?
I don't know if you should answer that question. I mean, people ask me a lot, should we wait for rates?
Well, we hear that almost every day, actually.
Yep, I know. I do too. And whenever I get that question, I always have the exact same thought. We've talked about it before on the show. Yep. I always say, hey, go to your front door, wherever you're at right now. Open it up. Is this America outside? If it is, yes, then it's a good time to buy a home. There's just so many things that you control, and then there's so many things you can't control, like mortgage rates, like inflation, like world events. What you can control is your credit, your savings, your debt, and really being ready to buy the house when it comes along, when the right place comes. And if rates drop later, you'll probably be able to refinance. So what you can't do is refinance a home that you never bought. So whenever you get that question, just let people know. I mean, look at the history of home ownership in America. Home prices go up. I can't tell you how many times I've heard from people like, we're going to wait till the market calms down. We're going to wait till this. And in the meantime, they're losing out on value. If they would have bought a home when they were ready, when their family was ready, instead of waiting and trying to time it all perfectly, they would have tens of thousands of dollars in equity that they missed out on by trying to get that perfect rate. So, all right, guys, just to wrap it up. Mortgages, they've been around for thousands of years in one way or another, although they've changed dramatically. Thank you, USA. And then again, just because today's rates may not be where we'd like them to be, they're historically pretty average. 6.68% we talked about. This is not a bad rate. Ask, your parents, or maybe you yourself remember back in the 1980s, rates were like 20%. So I don't want to hear complaints about 6.68%.
Big difference.
Yeah. Go do an amortization table at 20% and then tell me how painful 6 is. It's a whole different world. All right. Well, guys, I'm glad our audience was able to tune into this episode. Understanding how mortgages work, it takes some mystery out of the home buying process, and it can seem like a daunting task, but we're here for you guys. We're trying to make things as simple as possible, because when you've got questions, we've got wise replies at the Nic Wyse team. All right, guys. That's it for today. As always, Nick knows.
Nate knows.
Julio también sabe.
What does that mean? No, what he just said.
Julio knows too.
Julio knows too. That's right.
That's right,
guys. Call us when you need us. We're here for you. Thanks, everybody.
Awesome. Bye.
And that's a wrap on another episode. Thanks for tuning in. We hope you had as much fun as we did. We love sharing real estate insights, but as you can see, we also love to have a good time. This energy and passion is what we bring to every client. Buying or selling a home is a huge deal, but it doesn't have to be stressful. With the right team, it can even be fun. Ready to make your move? Let's connect.